So in 2025, I believe it'll go up to 1262, right? So I think it's going to be down by 12.6%. So it's going to be over here. So let's look at 12.6%, 12.63. So I think that's how we're going to close. So it's going to be for 2025. This is how I think we're going to close the year at 1263. Right? And then in 2026, I think we're going to go back up. So that's going to be minus 12.6%. So I still think we're going to see a drop for this year, and I think that's how it's going to end the year. But I do think in 2026, if they keep doing what they're doing, I do believe they're going to rise. That's 2025, and then I believe in 2026, my forecast would be 2153. Right. So it'll go up 164.1% in 2030, and it'll go up to 92.0% in 139% in 29. It'll go up to 92% in 28. It'll go up to 92.7% in 27, 49% in 26, and I think it's going to drop by the end of this year. Right, so that is right. Now let's go to NIO. Right, so let's get in NIO. Right. So the tariff has been driven volatility. It's been through rough one of the shares. So one of the Chinese electric vehicles maker, NIO, right, which in April fell to a multi-year low of $3.02, right? The rebound after, and now is up by 11.3%. Since then, though, NIO reported sharp increased deliveries in the first quarter. In the fourth quarter, report fell short of expectations. Right? So though NIO is a sharp increase in deliveries in the first quarter, the fourth quarter fell short of expectations on both top and bottom lines, and it included a disappointing outlook for the year. This was the first report since the launch of its new mass market brands, Onvo and Firefly. NIO is the third largest electric vehicle company in China. Swappable battery pack. Due to new product launches and growing in the market since 24/7, Wall Street projects signifying gains from the stocks. By the end of the decade, if you're looking to mega trend with massive potentials, make sure to grab a complimentary copy of our next NVIDIA report. So the stock is trading by 14.2% lower than the beginning of the year. So compared to the year ago, NIO's share prices is down by 16.1%. Analyst sentiments, right, has slipped this year too, with about half of 27 of them now recommending buying shares. Their mean price is down it to $4.87. But that suggests that there is a 30% or so upside to the next 12 months. Note, the high price target is about at $8.18. Mizuho just retraced a neutral rating, and some shares it's been around $3.50 target. So Barclays maintained in an underweight, rating at $3. And that's their target. Right, so they are down 7.3% in the last 6 months. Their previous close was at 362. So that was their last close. From the stock performance, right? So it's been a tale of two stories. When share debut on the New York Stock Exchange on September 12, 2018, at a $9.90, they struggled to build that momentum. Not until the summer of 2020 did the stock begin to surge, gaining over 810% from June 26, 2020 to February 9, 2021. When the stock hit an all-time high of 62.84, shares have fallen considerably since the long-term outlook, but it remains strong. It aims to provide what's going to happen in the next several years. Our best estimates on year's price. Look, their cars look sporty and flashy. That's what I like about them. They're very, I think they're a lot more sportier than Tesla's vehicles. Like a McLaren kind of vibe to it, compared to the bigger, bulkier car from Tesla. Right, so let's look at what's happened since 2021. End of year. In 2022, it was 1930. In 2023, it was 1070. And in 2024, it dropped all the way to 436. So what does this mean? So the revenue growth for both firms is similar, but Rivian's operating loss is more than double the yearly operating loss for NIO. So NIO formerly contracted manufacturing to Jinghai Automobile Group, paying a fee to each vehicle produced, in addition to a fixed cost. So the company has since acquired the factory from JAC. This agreement is beneficiary for a young startup in a very capital investment market. However, when scales reach the variable costs, a model in the downside, right? So this is the three drivers of NIO's performance. Number one, new model launches similar to a Tesla. NIO started off in a higher-end Roadster, used higher-end models to reinvest in the model affordable to a mass market. Vehicle NIO aims to push further into price-conscious markets while also adding to options in more premium customers. Then they have the add-on service. So with NIO's battery swap technology, the company plans to roll out an initiative battery as a service solution for customer based. So the company plans on building over 4,000 swap stations by the end of 2025, with 1,000 of them being located outside of China. So increased vehicle deliveries at the market, right? So the market for the new vehicles, MEVs, is on the rise in China. So NIO expects vehicle deliveries in 2025, which doubles the output of 2023. So roughly 165 units, and this is still only makes up about 2% of the Chinese NEV market and gives NIO plenty of roadway to gain the market and shares for the years to come. But its international expansion, NIO's strategy includes expanding the market outside of China. So the company built its first overseas battery swap in Hungary in 2022. In 2022, right? And several services centers in NIO's accessory business throughout Europe. So guess what, guys? In December 2024, the company delivered 31,138 vehicles, good for a 72.9% year-on-year. Increased their total of 221,970 vehicles were delivered in 2024, which was a year-on-year increase of 38.7%. Compared to 2023, the cumulative deliveries reached 671,564 as of December 31st, 2024. The battery changing solution of NIO's advancements in the battery on the overall cost of the vehicle. So the vehicle at 15 to 30%. So focusing on younger customers, NIO's leadership to the EV technology provides brand equality to younger generations of drivers who value enhanced technology packages. So how does NIO play out in the next 5 years? Right. So compared to Rivian and Tesla, NIO's prices and sales valuation will be modestly discounted. While NIO's solid financial standing, premium brand image, it remains uncertain how much competition the company will face, both in China and if it expands overseas. So the company is already spending a quarter of revenues on the R&D. And if NIO cannot capitalize on spending, the stock prices will sluggishly be compared to North American EV manufacturers. As mentioned, Wall Street analysts give NIO 1-year price target of $4.87, represents a 30.2% upside potential from the current share price at the moment. We expect to see revenue growth of 60% for year on year. So the price sells a multiple of 1 times, which puts the year-end price target of $6.63. So that would be a gain of 76.8% from today's share price. So for 2030's estimate NIO's stock price at $25.89 per share, our estimate prices would be 590.4% higher than the current one. So here's a look at my price in the next 5 years. Right. So in 2025, this is how I see it. I'm looking at 6.6.3 for the end of this year. Then we're looking at $7.80 for 2026. And then we're looking at 13.18 for 2027. At 2028, I'm looking So that's my price, what's going to be happening in the next 5 years. Right? So it'll go up in the next 5 years by $592 percent in the next 5 years. Right. Let's look at the Apple, the AI empowered enhancements. Look at Apple 11, APP. Right. Who are they? What are they? Let's get into it. So after hitting, and this is my price prediction for 2025 to 2030, right? So 525, $5.25, right? In February, Alpine Corp shares price tumbled more than 35%. Right? Due to pending class action lawsuits. And in short seller reports, however, the software companies better expected for the first quarter. A report gave a stock boost last month. The price is now 17.5% higher. Right? Becoming of the year. So compared to a year ago, the stock is 397% higher, far outperforming the SP 500 and the NASDAQ at that time. Since the public went public in 2021, the stock price was up 556.0%. Have well done in owning recent years. So Apple loving has been among the top tech stocks, seeing a lot of love from the market. But it's still true to its recent overhang. So Apple loving Corp has been incredibly strong and driven in their core businesses. So the module helps online advertisers boost monetization and marketing efforts in their solution. So key drivers propelling Apple loving is going forward to include enhancements in AI-powered advertising, as it's explained in the e-commerce advertising. So here's the stock. Its inception, Apple loving could be headed over the next few years. So these days, company focuses on providing software solutions and enhance marketing and monetization, online advertising. The thing is with Apple loving, there's certainly a catalyst worth considering. And while those go shortly in continuous, so the benefits from a strong circular growth tends investors in seeking increased exposure. As investors continue to pile into such stock retails, investors appear eager to gain outsized exposures ahead of continued boom. So, is it worth remembering Apple loving, and did they experience drawdown of more than 90% from its post-pandemic highs of 2021? So the stock headed further beat down in the momentum reel. So let's dive into the catalysts and predictions on what's going to happen in the rest of 2025 and the end of the decade. Right. Contended with plenty of news. For instance, the analysts are covering Apple loving has not been a bullish on the company. So many I think are having issued warnings of the stock the past year, or due to concerns surrounding the company's fundamentals. Nonetheless, nonetheless, the key drivers are propelling AIs going forward. So Apple Loving's Axon AI engine has been a game changer, optimizing, targeting, and expanding beyond gaming into categories like e-commerce, fintech, and automotive advertising during the Q4 24. Earnings call CEO Adam Forgo highlighted that for the first time, Apple Lovin captured a significant share of holding shopping ad spends, validating that AI's models are effective outside gaming. So, scaling that AI beyond gaming, the company initially focused on the direct to consumer, the DTC. So, brands put early pilots and have shown AI driven success across the multiple verticals. So, this means any business in any industry could potentially tap into Apple Levin's advertising platform. Personalized advertising with a generative AI, the company is developing automated tools and AI generated creatives to improve engagement. So, Apple Loving is self-service platform currently in development, which is eventually allowing businesses to run a major step to scaling its reach. So Apple Loving AI capabilities are providing to be industry's agnostic, opening the door for millions of global advertisers. So Fogy descriptions of the fourth quarter of 2024 and the major milestones making Apple Levin's first real presentation into e-commerce advertising, a historical company primarily mentioned by mobile gaming and ads. But by now, the retail consumer brands are joining a platform of large numbers. Surging demand from e-commerce brands, advertising saw strong return on investments. During the holding and prompting continued the demand of the platform in 2025. So self-service on the next big growth of currently the company manually self-service expansion. So in the next big growth driver, currently the company manually onboards advertisers. But in 2025, the launch of the automated tools and self-service platforms will allow thousands of new businesses to join. So the e-commerce is advertising to be a major revenue contributor. Once self-service tools become operational, adoptions could scale exponential. Right, so Apple Loving is officially exiting game development and move their fees up to resourced focus entirely on advertising technology. I just think there's too many people in the gaming thing now. I think everybody's trying to branch out because I think gaming's pretty much done and they have the leaders in the market. Unless someone new with a fresh idea comes in, I think that's how it's going to go for gaming for a while. 100 million sale of apps businesses for Apple Loving announced that it had signed an exclusive term sheet to sell mobile gaming division. With 500 million in cash and 400 million in equity in private company. Why this matters? The company originally acquired gaming studios to train AI models, but it was never meant to be a core. Not that as self-sufficient, Apple Loving is no longer needs development in its own games, shifting to pure ad tech modules. The gaming diverse the company can fully concentrate on expanding advertising ecosystems, so positioning itself as a direct competitor for Google, a Meta at that tech space. So, dive testing from a mobile game and a giant pivot to the stock. It paves the way for pure advertising technology company. Right. So what does that mean? So its previous close was at 380.58. right? Its gross margin is 37.40%, and its volume is at 255 million, right? So the clearly strong reason for Apple loving its stock is to simply put investors and have been betting on Apple having potential as an AI winner. As the AI advancements have to accelerate the company's growth. If the company can continue to multiple and be warned, there's a stock that could be heading for, assuming the company is a multiple and it says it has the same earnings, according to analysts and estimates. So the Wall Street is one of the target prices of the Apple 11, risen by between 459 to 4, which would be the gain of 23.9% from the current price, on the average of 27 analysts covering the Apple 11 recommendation. So buying shares, 4 of them would be strong ratings. So forecast projects Apple 11 stocks to price at 377. By the year end or less. That's 2% higher than today's price. However, we expected stocks to continue its strong growth rate and outperform analysts' expectations going forward. So how do I see it in the next 5 years? Right, let's do the 5-year analyst. So I think this year it'll close at 377.10. Right. Then in 2026, I see it being a 445. $20.27, I was shipping at 500. By 2028, I'm looking at 572. $609. By 2029. And by 2030, I'm looking at 662. So that's my prediction of the next 5 years. So it would have gone up by 78.6% in the next 5 years. Look, let's take a look at Meta. Where will Meta be in 1 year from now? So guys, I'm going to call it for today, and tomorrow let's pick up a Meta, yeah? Cool. Thank you for joining me on my channel. Hope you have a super one. Guys, remember, trade with logic and not emotion. I'm Reagan the Bull, and see you all tomorrow in live stream.